Hi there, my name's Drutter. It's November the 14th, 2013. I'm uploading this video under duress during a period of time I believe will become known as the Great Google Plus Mistake. I think the information is important and needs attention. I wish I could hear your thoughts after you've seen it. However, private messages continue to work, and this video is embeddable. Janet Yellen, the new Federal Reserve chairperson, was talking with the Senate today where she said that she sees no bubbles forming in the stock market and she's looking forward to a very strong recovery via more quantitative easing. The economy is said to be in the midst of a robust recovery. Some force is moving these market indexes higher. I decided to measure the Dow, S&P, and NASDAQ indexes, which measure very different parts, or supposedly measure very different parts of the US economy, against each other, and this is what I found. If you take the graph of each one and impose it over the other, you'll notice that there is absolutely no difference between them. We can do that with the other one here. I don't know which one's which, I didn't label them, but it doesn't matter because they are all identical. There is absolutely no difference in the three indexes. The same force is in control of all three of the major markets in the USA. We all know what that force is, of course, and it's the Federal Reserve and their policies. So I decided to mark all the Fed's major policy changes onto the graph in green arrows. QE1, which wasn't called QE1 then, it was just called QE because they said it would only happen once, occurred at the bottom of the chart on the left, right at the end of 2008 during the financial crisis. That indeed did boost the stock market up, but it began to cool down again, and QE2 was announced right here. Once again, markets started to fall, and QE3, also known as QE3 to infinity, was announced right here. And last Christmas, as the stock market began to take a turn for the worse once again, QE3 was ramped up to even higher levels right there. Conclusion, the stock market tracks nothing other than the policies of the Fed. The economy and the strength of the companies being traded no longer has any significance or effect. The robust recovery is actually an illusion created by accounting tricks backed up by media propaganda. Printing trillions, yes trillions of dollars from thin air has to have an effect on other markets though, of course. So let's look at a market that a lot of people on this channel are familiar with, the silver market. There it is, and we can take the exact same time frame and line it up on the left there at the same starting point and then compare, see what happened. On the very left we have the silver market coming down, and if it extended further to the left beyond the 5-year time frame, you would see it coming down and down and down like this, just as the stock market did. And they both bottomed at the same time. And they both reacted to QE1, and they both responded well, and both moved up, and then began cooling down a little bit here, although silver didn't really start cooling down, it was still kind of gently trending upward, but the stock market was having a bad time, so QE2 was announced here. This once again had a very bullish effect on the stock market, which made a new high here, although silver made a much higher new high. Both markets began to cool soon after, and QE3 was announced to boost the stock market here. But at the same time, when QE3 to infinity was announced, the silver market did not make a bottom, it made a top, and has never seen that high since. When the stock markets stopped making new highs toward the end of 2012, QE3 was ramped up to an even greater pace, leading the stock market to make all-time new highs today, but at that exact same moment, pushing silver down from another top to a new low at $18. In summary, both markets were suffering at the end of 2008. QE1 boosted the stock market as it was supposed to do, but it also boosted the silver and gold markets. QE2 was necessary to keep the stock rally going, and this pushed silver and gold to even more astounding highs. QE3 is what changed everything. It had the exact same result on the stock market that the other QEs had had, but for some reason the pattern changes here. Silver and gold made a top instead of a bottom at QE3 to infinity, which is essentially the printing of more dollars out of thin air, something that should push the value of anything denominated in dollars up, and the value of those dollars down. You can't double the number of dollars in existence without having any effect on the prices of things that are measured in those dollars. The acceleration of QE3 here had the same effect on the stock market, which is a further boost, and it had the same effect as this QE3 announcement on silver, and silver has never been that price again. As a result of my work this year with the silver price versus demand divergence, also known as the Drutter divergence, I thought I would put a chart of the demand on this graph. Here's the demand for silver, roughly, over the same time period. Demand for precious metals seems to roughly follow quantitative easing, shown in green, and the stock market, shown in orange, but only follows the silver chart up to about here. As soon as QE3 occurred, precious metals prices began responding negatively to QE, while demand continued to make new highs, just like demand for the stock market. Quantitative easing is having the intended effect on the stock market and allowing the powers that be to claim that the economy is recovering even if it isn't. Precious metals, which should track the number of dollars in existence, did so for QE1 and 2, but since QE3 to infinity, it has had the exact opposite effect that it should. And even though demand for the precious metals is through the roof, the price continues to fall. How are the Federal Reserve and the other big banks managing to keep all this printed money from getting into the precious metals markets? Or perhaps a better question, considering demand for the precious metals is through the roof, how are they managing, since QE3 to infinity anyway, to have this precious metals chart do exactly the opposite of what it should be doing? A reminder, until YouTube allows all members, not just Google Plus users, to post comments, my videos will not have a comment section. Talk to you soon.